Hi everyone and welcome to the Access Pay Direct Debits All You Want to Know and some things you probably didn't want to know event. I'm Jim Conning, I'm Banking and Alliances Director at Access Pay, and our guest today is Gavin Lawrence. I'll let Gavin introduce himself in a minute. My background, I've 20 odd years in payments with companies like Iger, Experian and Bottom Line, as well as Access Pay. With that, I'll hand over to Gavin, who can introduce himself.
Yeah, no problem. Thank you, Jim. Gavin Lawrence. I am the director of a company called Movimo, and we are a consultancy and training organisation and specialising in backs and direct debit payments. Previously worked in all sorts of different organisations, having sold payment software, worked for Pay.UK and had another similar business to this, but probably more bureau processing than just training and consultancy.
Thanks, Gavin. So you're our expert today. I'm just
I'll do my best.
So today we want to look at how organisations can collect payments effectively by managing the direct debits in-house, the benefits and challenges and real life experience, as well as we'll look at the future as well if we've got time, and talk about things like new payment architecture briefly and open banking. So
what might be coming down the line, yeah.
There you go. So without further ado, Gavin, what are the challenges that you've seen for businesses implementing direct debits, both externally and directly themselves?
I think that they're changing over time. I think there was a bit of a trend towards people taking an easy option in the last 10 years or so, where quite a lot of these off-the-shelf solutions have been popular, where you can go to an organisation such as London and Zurich or go cardless, and sometimes it's already integrated with other platforms and CRM systems. So it seems like the obvious thing to use, and that was a change in itself away from what people were doing previously, which was typically getting sponsored by their bank and then looking at managing their direct debits in-house. And I think we now might be going full circle. I'm seeing a lot of people who took that option because it appeared as though it was the sensible, easy option. And I would say the vast majority of inquiries we're getting at the moment are about people looking to try and bring that back in-house, or to look at whether it might be cost effective to bring it in-house. And I think it's largely cost driven.
Right.
There are certainly other reasons why people are looking at it, more control, etc. But there seems to be a particular need to look at this at the moment, and that's largely cost driven, because I think the pricing has gone up amongst some of those organizations' offerings.
Okay. And if I was considering bringing it in-house, what elements would I have to consider?
There's probably three main elements to collecting direct debits, and you sort of get all of those three elements sometimes from these off-the-shelf solutions, but perhaps the way to think about it is that direct debits effectively are in three parts. You need to be sponsored by someone, and that is an organization that will take an element of risk, and that's typically a bank, or traditionally that was always a bank or payment service provider. And your big high street banks are the main providers of that. It's the likes of NatWest and Barclays, Lloyds, HSBC are the bigger players in that sector, without a doubt. So you would approach them and get sponsorship, which means they give you a 6-digit service user number, and you make an application. That's 1/3 of the equation. You then need to find a way of managing your data in-house. That's who am I collecting from, what are their details, when am I collecting, and how much, and being able to create that data in a nice simple file format perhaps. And then the third challenge is, how do I get that data securely over to the central infrastructure, which in this case is BACS. BACS is one central system to manage all of these payments, regardless of which banks the money is coming into or out of. It always goes into the center, which is the process that we talk about as being BACS. And that's it. Those are your three main elements. And as I say, you can get all of those from one organization, but I'm not necessarily a huge fan of that option. I think it's a really good vehicle for people that are starting out or have no experience. But I think as organizations mature, or slightly larger organizations, very large organizations almost certainly would be running this in-house anyway. It wouldn't be cost effective to outsource it. But increasingly now we're seeing some of those ones that perhaps a bit smaller that saw it as an easy option, looking at this, can we manage this using our core software so that everything is in one place?
Sure. So I've seen in the past, the larger organizations using their CRM system.
Yep.
It's the direct debit customer records, so it's one place. Is that what we're talking about here?
Yeah, whether it's a CRM system or a billing platform, if they're a utility company or an ERP system, most organizations have got one central customer database, or certainly most business to consumer organizations have. And if somebody calls in, that's the system that your operators would have open in front of them.
Sure.
You can see transaction history, you can answer their questions. The slight challenge of outsourcing your direct debits is that you have that system. So somebody calls in and asks a question, and then specifically they ask something about direct debits, and it's like, hang on a minute, I might need to shut down that window and go into something else. Or alternatively, another challenge might be that the data isn't synchronized real time. So the information you have on screen could have been uploaded from reports that were picked up, 1 or 2 days earlier. Whereas if you have an in-house system, you would be able to load those reports back in as soon as they're available and have up-to-date information, which leads to a better conversation with your customer about where they're actually at.
Okay.
So yeah.
Yeah, that makes sense. And if I'm an organization, what you said cost, but is there any other things that I should take into account between moving from indirect to direct? Direct debit stuff.
I think the main things people sort of talk to us about are feeling like they have more control over the process. And it's control and visibility, I would say, the two big factors. So in fact, if you take cost out of the equation, which was perhaps the situation a few years ago when some of these services weren't quite as expensive, or people hadn't really sort of focused on the cost element, there were still compelling reasons to think about doing it in-house. And that was, more control over the process, being able to control the sign-up process and have it in your own branding and have the collections in your own name. Those things are important to some organizations. And they want their customer to feel that they're doing business with them and not paying a third party. So yeah, definitely that control and visibility and having everything in one place, I think, were the compelling reasons for doing it anyway. And then we've now got this extra, perhaps not just a compelling reason, but a compelling event, i.e. right now prices have gone up.
Sure.
So I think that's now made people actually, they may have considered bringing it in-house, and now they're going, actually, we need to get on and do this rather than just consider it.
So the pain of price increases, etc., has driven them to the point where they want to move now.
Yeah, and they may have even looked into it and said, okay, we'd like to do it, but it's on the back burner or something we're going to pick up again later. And now it's like, okay, I'm now going to pick it up. Yeah.
It's less of a priority for them. And have you got any success stories about companies doing it, or?
Well, I should hope all the ones that I know about are success stories if we've helped them. But there are definite challenges to doing it, because you're going into territory where you don't feel as though you have the expertise. And one of the things that people have found is that because they've got everything from one place in the past, a lot of these things are done for them, and they don't necessarily need to have much specialist knowledge. So I guess they tend to come to us because they want to upskill, they want to get a bit of training, or they want someone to hold their hand through that transition. But actually, once they're up and running, it's fairly straightforward, and they tend not to go back. They tend to like running it in-house. In terms of success stories, I can't think of anyone that has moved it in-house that then said, actually, we're going to go back to using a third-party provider. I don't want to sort of necessarily name customer names, yeah, I mean, the feedback we get is that we wish they'd done this a bit sooner. We just didn't have that compelling event perhaps in the past.
Got you. You've always got to look at the negatives. So are there any risks, and if so, what are they with moving to direct or bringing it in-house?
Yeah, so I think one thing that we would counsel against is bringing it in-house and only having one or potentially two maximum people that understand the process in-house. You end up with single person reliance. And I guess if you're outsourcing it, you don't have that concern quite so much. So it is important to make sure that you've got probably at least 2, if not 3 or 4 people in the organization that understand how the process works, just for cover and holidays and things like that. I think the other thing is that you do need to make sure it's all working and test it thoroughly, rather than just assuming it's all going to be lovely. And just because your CRM provider says, yeah, we've done direct debits in the system before, it's great. It's not just thinking about, well, can my main core system deal with direct debits? It's actually, is it correctly integrated with my back software? The way I'm going to submit that to back, so that might be where you guys come in as an organization, or have I got the right level of authority from the bank because I want to do paperless direct debit. So there are some considerations, but these are mostly at the setup stage. And once you've had a couple of successful collections, you can relax a little bit.
Actually, you mentioned paperless direct debits. Can you explain the different levels of direct debit?
Yeah, so if we go back a long time ago, so when I started in the industry, most people did everything on paper. You'd physically sign a direct debit instruction, and then even more strangely, you would post that off to the bank. So if you were the organization collecting, you'd get that from your customer. You'd send that to your bank in the post. So both parts of the process, your customer sign-up journey and the bit where you notified the bank that you had their authority, was all on paper. The vast majority of organizations have now moved to having at least part of that process automated. So even if they still get a paper sign-up from a customer, they almost certainly use something called Audis, which is the automated direct debit instruction service, to get that data to their bank. And frankly, if you're sending the data to your bank electronically anyway, I think the obvious question is, well, why do you need a piece of paper from the customer? So, and again, I don't have the statistics on this, but most organizations that now start collecting direct debits would go paperless from day one.
Yeah.
I don't see anyone implementing a scheme today where they start with paper and then migrate later, but that is what used to happen. So yeah, I think it's a default today that if you're going to do direct debits, you've got to offer telephone and internet sign up, probably.
Sure. And moving, whether you do indirect or direct, is there any advantages you've seen in if it's a bad journey and you get failed direct debits? Is there any advantages being direct with that, or are they the same?
What, doing it in-house or?
Yeah, in-house, sorry.
Well, there's pros and cons to this, because on the one hand, if you use a third party, they will take care of quite a lot of those failures and they will update the data that they hold automatically. But they have their own way of doing it, and there are choices. It's not as if there's just one option with how you manage direct debits. So for example, if you get a direct debit come back that says refer to payer, and that's a non-specific reason for a failure, although I think most people believe that 95% of those are insufficient funds. You have an option to represent those direct debits, and you can do that in your own timescale. The rules basically say you can have another go within a calendar month. In fact, you can have 2 more goes or 3 more goes within a calendar month, as long as you've got a reasonable expectation that you'll have a successful collection next time round. Well, if you're getting this service from a third party, that's not always configurable or easily configurable. So you tend to get what you're given, which in the first case is probably not representing. Or it may be that it is representing and actually that doesn't suit you because you're a charity and you don't want to automatically go for the funds again. So having, again, that control, that's what I was sort of talking about earlier, that people like about having it in-house. And you can do it even on a customer by customer basis. You can put a flag in the database to say, we would like to represent for this one, but not for this one. And you don't get those options with off-the-shelf solutions so much. But outside of that, in terms of other payment failures, just getting real-time reporting. You get the funds in your account straight away, and then you're notified if some of those payments are likely to fail and effectively get taken off you again. So that reporting comes through quite quickly when you do it in-house. As long as you've got the right connectivity to backs to pick those reports up and get them sort of downloaded on a daily basis, then I think it gives you more flexibility and better visibility for things like cancellations or changes to bank details, etc.
Great, thank you. That's kind of us done the direct bit. Let's look to the future or where we're going. So if I think about my background, we had old Modulus checking when I first came in. And then we have things where we use credit files and what have you, and we've now got confirmation of payer.
Yes.
Anything to talk about there?
I think what was interesting is that if I go back 15 years ago to when you and I first met, Modulus checking was seen as being a nice to have in some cases. You had to have it for paperless direct debit in those days, but for a lot of organizations, it was a case of, well, this is an improvement, this is an enhancement that we could add. Whereas today, I think Modulus checking is default. I don't know anyone that doesn't use it. And in fact, when you're submitting data to BACS, it's mandatory. You have to do that check at final stage. So yeah, we've definitely moved on. I think it's a much more efficient, more reliable service. We get far fewer failed payments now at first collection, but we do still get some. And we also have a challenge around verifying payer identity. And that, I would say, again, if I look at all of the questions that I get asked, I was on a call this morning with somebody saying, how do I deal with this KYC requirement? The bank is telling me I need to do these know your customer checks, and I don't know how I'm supposed to check their bank details. Well, Modulus checking was not really allowing you to verify ownership of account details, whereas the ability to now do a name check on a bank account has made a huge difference. So I would say, yes, it's an option today, whereas Modulus checking is almost considered mandatory. But for me, it would be a bit of a no-brainer to use it, because again, you're reducing your failed payments. You know that bank account exists, not just that it might exist. And it potentially puts a big tick in the box towards that KYC journey as well.
And just for clarity, I think the BACS rules, do they use the term verification or validation?
They use both terms. This is where we could get in trouble here, because it's quite complicated.
Yes.
Yeah, you should be validating people's bank details. It's mandatory at point of submission and highly recommended at point of sign up.
Got you.
What is then on top of that is that for paperless direct debits, it's mandatory to verify that the person that you're signing up is who they claim to be.
Right.
And that they own those bank details. Now, this is a really tricky area, and there's no sort of definitive way of doing it. So you can go out to market and you'll find all sorts of different tools out there. We have account information checks through open banking, which I think are a really good high-level check, but possibly hard to implement because it requires the payer to positively confirm at the other end. You've got the standard Modulus checking, which is very low-level check and doesn't tend to satisfy the bank's requirements these days. You've got other third-party checks which go off and look at lots of different data sources. But I think, for me, if you can identify that the name on the bank account using the sort of confirmation of payer type check, if you can confirm that that name matches, and then you can independently also do an ID check on the person you're talking to through a third-party database, whether it's electoral roll or a credit reference agency or something like that. That, for me, gives you a fairly easy to implement and quite high-level check. So at the moment, that's the route that I would generally recommend to people.
Great, thank you. In terms of new open banking and new payment architecture, variable recurring payments is sometimes in the press, and whether or not new payments architecture will replace direct debits. Any comments on?
Be careful what I say, because I was on the inside of this for a while. So I worked on new payments architecture and specifically was looking at what the future of direct debit might look like. Interesting, I read a report today which came out from UK Finance, and it's talking about the growth of direct debit into 2033.
Right.
So I mean, obviously, the people in the know seem to think it's certainly going to be around for quite a long time. I think, so they're different things. New payments architecture could potentially change the rails that things like faster payments and direct debits run on. But that's been sort of shelved or mothballed right now, and there's a whole review going on, which could take a couple more years before we ever get to see new payments architecture rebooted. And I don't think it would be exactly the same again. So I think that would be at least 5 years away before anything becomes live. And then direct debits were never in the spec for that in the first place. They were always considered something that might be looked at afterwards. So I think we're talking about it's a long way away. I think it's something that people should know is in the rearview mirror, but I wouldn't overly concern myself right now. If you look at, and again, this is on the same report today, if you look at the makeup of payments in the UK at the moment, Card payments dominate business to consumer. Direct debit account for 10% of payments and are still growing. That's 10% across the board, but probably more like 40% of the value that comes out of most people's bank account. So these really super established, predicted to be 5 billion transactions by 2033, they're not going anywhere quickly. So I think variable recurring payments could be a nice addition to that, and a great option if somebody can't pay by direct debit. But what I find interesting is you've seen all sorts of things that have come along in the past, like Request to Pay was touted as being the next big thing a couple of years ago. It hasn't really got off the ground. I don't see a compelling event for some of these things. I think variable recurring payments are really interesting, and open banking generally, I think, will continue to take off. It's doing quite well for certain transactions right now. But unless I was a very, very large organization that needed to go and look for alternative payment rails, I've got pretty good coverage with cards and with direct debits right now. And I'd have to have a really good reason to look at doing something or being an early adopter, I think.
That's great. Thank you for the last 20 or so minutes.
Has it been that long?
I think it may have been.
Okay, cool.
You know, to summarize, I think direct debits is here to stay for at least a while.
I'd say at least 10 years, probably longer, and in some format after that as well. So
we should all be, those of us that it's appropriate for should be considering it and looking at the different options. So with that, thank you, Gavin, and we'll talk again soon. Thanks a lot.
Yeah, I hope so. Thanks, Jim. Appreciate your time.